Crypto has endured one of the most painful, one of the most brutal collapses that I've seen, certainly ever in a bull market, but even up there with some of the worst bear markets that have ever happened in this industry, leading to the question, are we in a bull market? Is this what a bull market feels like? Certainly not. But is there a case to be made that this is part of a longer cycle and that we have seen something completely change with the very nature of how Bitcoin and crypto cycles actually work? What I'm going to be going over right now is going to show you my perspective on not only where we are in this particular cycle, if you can call it that, but it's going to make a case as to where we're going. And this is something that I've gotten a lot of confidence on over the last several days and weeks as we've gone through this change in direction. Whether you're going up or down, having the right framework as to why you're going that direction, how long it will last, and how to manage assets in the process is the ultimate key to winning whatever direction you're going. Now, with that said, I want to thank you for a few extra days off. I just beat the allegations on food poisoning. Took me a little longer than it should have, and it was absolutely brutal. So thank you for the extra time off, and it feels good to be back. Now, let's harken back, of course, over the last few weeks. I know I've been making a pivot. I started talking about playing defense. I went from all out, hold it, balls to the wall, ignore the FUD. This is the super cycle. We're holding to Valhalla, to saying, hey guys, we need to play some defense. And here is why. Let me recap this for you, because it started to become painfully obvious once you started seeing the rhetoric out of the new Trump admin. First off, it's not just crypto. Look at the stock market on Trump 2.0 versus 1.0. This is a massive cliff that it's fallen off of. Trump kept coming out every day saying stuff like, the sell-off doesn't concern me, even though Wall Street had its worst day since the 2022 market collapse. Just listen to this rhetoric about economic transition.
When it comes to the stock market, the numbers that we see today, the numbers we saw yesterday, the numbers we'll see tomorrow are a snapshot of a moment in time. And as President Trump has said, and I'm here to echo the remarks of this president of this White House, we are in a period of economic transition.
We thought they weren't a fan of transitioning, but hey, here we are.
Top 10% of Americans are 40 or 50% of consumption, and that is an unstable equilibrium. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down, and could we be seeing that this economy that we inherited starting to roll a bit? Sure. And look, there's going to be a natural adjustment as we move away from public spending to private spending. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period.
A period of transition. Sell-off doesn't concern me. A detox period. The economy is hooked. These are the types of things that you hear massive hawks talk about, people who want to completely change the way that this centrally planned economy works. In fact, the way that the economy has been functioning since the 2008 bailouts, maybe a little even before that, with this era of money printing and stimulus, this is what they're talking about fixing. And this is a monstrously big problem to solve. This is not something that gets solved in one swift go, but this is something that the more they talk about, and if you really listen to them, if they're serious about this, which I think they are, this is the kind of stuff that will absolutely devastate markets. If they're really talking about completely removing government spending from the markets, well, that's not how the markets have been working. So the question is, how far can they push this without something breaking? Or is something breaking the goal? We'll talk about what we think is the goal a little bit later in this episode, because I think that it's intellectually lazy to say, oh, they're just erratic. There's no goal. Chaos is the goal. No, this is clearly something that has been the game plan. They stepped foot on the gas on this particular plan on the first day they got into office. So clearly there must have been some forethought here, but let's jump in because this is the end of it. In the same interview, they asked the White House correspondent, how far do stocks have to fall for the president to change course? She says the president will look out for Wall Street and Main Street. People should bet on this president. But as Trump has been saying, there could be a little disruption. And the disruption is being felt. I mean, if you look at this Tesla sell-off, which came down to 217, let's just go ahead and check out that fall. You have essentially a 55% fall from its recent highs, and the actual total value of that fall is 270 points. So if you look at that 270 points and you look at the worst Tesla collapses in its history, this is the weekly chart, you see that, okay, there's one here, you get a 63% fall for only 41 points, right? I think I have a logarithmic chart on here. Yeah, I have a log chart on. But if you go here and you see, okay, here, this is the worst collapse. This is the 2022 bear market. And you see that it collapsed 311 points, was the worst it ever came down. And you're now looking at something that has almost rivaled that, right? So you're looking at one of the worst sell-offs in one of the most popular stocks in the American economy. Certainly we know Tesla is obviously the center of this sort of Trump energy of the campaign, with Elon running, I mean, essentially helping run the government. But this is the thing that we didn't expect, which is that the black swan itself would be Trump. And the last time we had a black swan was the last bear market. So the question now, with our total market caps, our total crypto market caps now sitting down about $1.3 trillion from the highs. And as you can see, if you just look at the total market caps and you look at the change in market caps and you look at the price action, you say, okay, what does this price action remind you of? Like, look at other places on the chart. Don't even overthink it. You know, it looks a lot like this, right? When was the last time you saw a price action that looked like this? I mean, it just looks like bear market collapses. And that brings up the question of, where are we in this cycle? What is this cycle? Because a lot of people are calling it a bear market. And I'm going to make the case for you right now that it's not exactly a bear market, but it's not exactly this full-blown bull market that we thought we were in. But the real issue is that none of you have said thank you even once in this interview. I will go ahead and forgive you now for this, just once, but JD Vance won't. JD Vance will not forgive you. So what's the goal? That's the real question here. What is the goal of all of this? Because the question for me is always to figure out what comes next. We can be sad that we didn't sell in early December. We can be sad that we're looking at our portfolios that have drawn down, that we were expecting some kind of left translated early 2025 cycle. Everyone was looking for it. We didn't get the retail inflows. We didn't get a lot of things. But I think that when we look at what we didn't get and what we did get, we start to arrive at much more clarity. But before we get to how we're going to analyze the markets, how we're going to play the bags, I think we need to understand what's the point of all of this coming out of the Trump admin. Well, to me, it's very clear that this is an orchestrated plan. And whatever you think about Trump, I know that the world is pretty much split 50-50. 50% of the world think that he's a political genius. 50% of the world think that he's an erratic maniac, and you can't tell either side anything. I personally consider myself pretty objective as someone who grew up liberal and kind of converted into this Trump camp over the crypto vote. I find myself very much so looking at things from an objective and specifically from a markets and crypto-based point of view. Now, the easy thing for me to do would be to throw a temper tantrum and say, you know what? I regret the vote. I regret supporting this president because my bags are down. But in reality, I think that there's more planning here and that there's more strategy going on than meets the eye. First of all, Bessent is obviously a cohesive and planned out actor. He's got a great reputation on both sides of the aisle, and he's very well respected. From what I understand, Trump approached Bessent with a question almost 3 years ago, saying, how do we take inflation down without killing the economy, without ruining the American dream? How do we fix this situation and put America back on the right track? And that is the question that Scott Bessent has been thinking about for the last several years, because they knew the situation with rampant inflation, with unsustainable asset prices, with unaffordable cost of living. They've known this situation throughout the entire second half of the Biden term, and they knew that if they won, they'd have to step into this and do something. So to me, this is exactly what they plan to do. Whether we like it or not, we're in the midst of their plan. So what is that plan? We've talked about this because it seems like the erratic behavior is a strategy. Now, I think that this summarizes it. Fajau says, what if Trump wants a growth scare / recession so that long-term yields crater and he can issue century bonds to countries in exchange for security guarantees, thereby refinancing all the heavy T-bill supply into lower yield 100-year duration bonds and recalibrating the fiscal path? Now, this to me is an absolute mouthful, but you need to understand every single piece of it to understand why all of these aspects of what Trump's doing actually make sense. So first of all, let's disentangle this. Trump has been actually not only being hostile towards, foreign governments like Russia and adversaries like China, but he's also been playing hardball with some of our best friends like China, like Canada, like Mexico. Those are our close allies, but Trump has been knee-deep actually threatening them with tariffs and all kinds of hardball-like negotiating tactics. He's also been going over to Europe and saying, look, we're not going to pay for all these wars in, Russia. We're not just going to dump money into your defense. You guys are going to have to deal with it, right? So what is that actually doing? What Trump's doing is he's actually rearranging the entire playing field. He's wiping the monopoly board clean and saying, I don't care what properties you hold. I don't care how many times you passed go. We're going to have a new deal. And that new deal is going to be based off of completely new dynamics. I think what Fajao is saying here is pretty accurate, which is that Trump not only wants to refinance the debt, but he wants to do this in a way where he's using all of America's value, which is its military strength, its scariness against people like Russia and China, its ability to negotiate trade deals, to add tariffs, to take them away. He's using all of these pieces to say, hey, look, we have a debt issue. And if we don't fix this debt issue and we don't fix our inflation issues, then we're going to have a screwed up society where the middle class doesn't have any chance to get ahead. The people who elected Trump, the working class people, those are the people who actually Trump is trying to serve right now, because it's certainly not the asset holders. The asset holders are getting absolutely screwed right now. So I believe that this is the plan, right? And this is a massive plan because essentially he needs to not only crash the markets a little bit, which is what he's doing, so that controls inflation, that kills inflation, so they can then lower interest rates. Once those interest rates are lowered, then the long-term debt is cheaper. So he can take this short-term debt rolling over and refinance it as long-term debt. Again, this can take several months. Maybe it can even take a year or longer. We'll talk about timelines here later in the video. But the point is that if he's able to introduce a new type of bond and force other countries to buy it, because they won't buy it voluntarily. Nobody wants to buy a 100-year bond, especially with the way that America is going right now. But if America is able to show, hey, look, we're controlling our spending. We're no longer a kid in a candy store with the spending. We're not going to overspend like crazy. And on top of that, we're now going to give you guys a hard deal, which is we were just being your homies at first. We were just being your trading partner. But now we're going to force you for security guarantees against Russia. Oh, you want security guarantees, which we've been giving you the whole time? Well, now there's a different cost, which is that you need to buy these new bonds. Because if nobody's buying our bonds, especially the long duration bonds, America has a big problem. But if Trump essentially says, you know what, America has a lot of other ways that we can get what we want, and we're going to start using them, that's what we're looking at. We're looking at more of America being a bully, saying this is what we need and we need it now, and we don't care if it's right or wrong or if it fits everyone else's definition of what should be. This is what it is. And that's kind of what I think is happening here, which is that Trump is looking at this whole playing field saying, I don't care what's happened before. We need to rewrite the rules of how America interacts with other countries. We need to rewrite the rules of these alliances that America has based on current present net value, which America has this incredible military force, the scariest in the world. We have this incredible economy, the most powerful in the world. And we also have crushing debt, inequality, asset bubbles, and other things that need to be fixed and can only be fixed if other countries buy our very long-term debt and if inflation goes away. So those two things need to happen. They need to happen, and then Trump can go ahead and start being nicer to the investor class. But the investor class has obviously done very well. The working class has done very poorly. And in order to fix that, there needs to be a correction in markets. There needs to be a correction in inflation. Inflation needs to go away, and America needs to fix its spending problem. And if that happens, there's a chance, not a guarantee, but a chance that working class wages will start to then pace with the economy once again. So is the plan working? Well, what we know is that, Trueflation has the US inflation index around 1.3%. Look at this cliff that inflation has fallen off since Trump started his erratic tough talk about, tariffs. This, one day it's a 10%, the next day it's a 30%, the next day it's a 50% tariff. This is what's happening in markets is people, inflation's falling off a cliff. Markets are scared. We also got the official inflation numbers down to 2.8%. It was expected at 2.9, and so it came in cool under expectations, which is of course what you want. The real question is, where is this all headed? So let's go to the work of Arthur Hayes. He was the first one to call that we might be seeing a mini financial crisis emerging. And he called this back when Bitcoin was trading around $100,000. This was very, very aptly put. And I thought it was total fear-mongering at the time, but it reminded me of some of Arthur's best work at the beginning of 2022 when he was calling the sort of macro doompocalypse that we started seeing forming in the sky. Anyway, he says this, which I think is one of the most important lines. I don't believe the markets realize how little time Trump has to actually accomplish anything. The markets believe that Trump and his people can immediately achieve economic and political miracles, right? That's not true. He doesn't have the ability to immediately accomplish anything. But what we have seen is that his personality and his demeanor have allowed him to kind of do things that maybe other presidents wouldn't be able to do because he's able to move markets out of fear, out of uncertainty because of his erratic personality, his sort of larger than life, what's he doing personality. So he calls for a retest here of $70,000 to $75,000. He said, what could snap us out of this funk? Some form of money printing by the Fed, the US Treasury, China, Japan, etc., or concrete legislation that allows for permissionless crypto innovation. I do think that, Congress passing something would be great. In the end, though, we would really want some kind of liquidity stimulus. And we'll talk about liquidity here in a second, but if Bitcoin leads to the downside, it will also lead to the upside. That's one of the most beautiful parts about this, which is that if Bitcoin crashes first, which it did, it crashed way ahead of mainstream markets, it will also pump way ahead of mainstream markets. So beware, it will bottom first and it will top first. Those are the scary parts about being on the front end of the risk curve. So this is Hayes' goal right now, as of today. Be patient. BTC likely bottoms around 70K, a 36% correction from 110K all-time high. Very normal for a bull market, which he maintains we're in a bull market. Then we need Stonks, SPX, NDX to enter free fall. Then we get TradFi Muppet to go under. Then we get Fed, PBOC, ECB, BOJ, all easing to make their country great again. That's what, global stimulus, global quantitative easing. Then load the truck up. Traders will die trying to buy the dip, but if you are more risk averse and want central banks to ease, then deploy more capital. You might not catch the bottom, but you also won't have to mentally suffer through long periods of sideways and potential unrealized losses. Now, if you're sitting here and you're already sitting on so many unrealized losses, I do think 70K, that's what I feel like is kind of the low. Maybe there would be a wick below there into that value range, but I think that you're not going to see lower than that. We already tested that area way too many times. I just don't see us going and just shredding below there. No. We didn't know anything about this Trump crypto presidency when we made our way first up to 70K. I don't think we need it to stay above there. That's just my take. I just don't think we should go that low. Ansem, who actually called this entire move astronomically correct. Ansem has been the best trader in the markets. He said a lot of people are overeager to call a bottom. When price shifts from multi-month ranges to the downside with volume, it typically indicates a mid to long-term shift in trend. Mid to long-term shift in trend. You will very likely have time to buy the bottom after a period of consolidation in a new range. V-bottoms are unlikely unless driven by a substantial shift in macro, which would be an identifiable tradable event that you could respond to in real time instead of trying to predict. Respect the trend. Okay, so now's the time where I'm going to explain to you exactly where I think we are in markets, putting together everything that we know about what Trump's trying to do, the current price action, the global economy, the liquidity conditions, the inflation, the joblessness, the sell-offs in markets, the best traders in the industry, what they're saying about price, and of course, our sponsor, NordVPN. That's right. It might not be a bear market, but it ain't a good market. You got to pay the bills, okay? NordVPN, it's the best VPN in the world. All of you need this VPN right now. You need it more than oxygen. Make sure you have a VPN. For real, it's the easiest way to protect yourself across the interwebs. It costs you like $2 a month or something. You get a big fat juicy discount using my link in the description below. It supports the channel and I appreciate it. Shout out to NordVPN for sponsoring this episode. If you're in crypto, you don't have a VPN, please check out Nord. It's almost free. It keeps you super safe online. There's no excuse for not using it. Once again, thanks to them for sponsoring the video, and let's get back to the content. So let's get to the chase here. Is this a bull market? What is the bull market? Because the biggest eye-opening moment that I've had over the last few years was realizing that my current framework of this 4-year cycle had actually been broken. And in my opinion, that's actually quite liberating, which is to divorce yourself from a cycle that really made sense. It worked, but it also was kind of shitty because you had these 1 or 2 year periods where things were incredible and then it goes back to the Stone Age and everything gets reset. And how can you really grow substantially in industry when every couple of years things get completely kneecapped down to almost zero? That's not what we want for the growth curve of the crypto industry. That's what happened in the 1999 sort of tech boom when you had the dot-com boom and bust, and then you had 20, 30 years of consistent growth. That's how people got nurtured into the tech world and grew with it. That's what we need in crypto. And I believe, and I will be making the case right now, that we are seeing the first extended cycle for Bitcoin and crypto, one that has nothing to do with the 4-year cycle anymore, but has everything to do with macro liquidity conditions. And those macro liquidity conditions, while they do tend to ebb and flow in 4-year cycles, they do also tend to expand in much longer cycles over decades. So check this out. One, I'm just going to claim a little bit of clout because I drew this black line. You can see I drew it starting here on the 25th. I drew this black line where I had this double top here coming down. And as you can see, drawing these lines actually kept me from caring too much. When we got into this this reflexive pop when they announced the crypto summit, I said, you know what? I'm not buying it. I'm just not buying it, right? I actually sold stuff here and I actually was public on Twitter saying I was selling stuff. I had this whole thread if you were following me there. I also made a couple of videos talking about how I'm going to sell stuff. I made another video up here in this red zone saying I was selling stuff because I just wasn't believing that we were going to be holding these areas based on some crypto conference where people were expecting something magnificent to be announced. I don't know, something crazy. Certainly wasn't. So I knew that this was going to be a bit of a trappy area where we were going to obviously retest this range. And we got an absolutely scary drop here. But, I thought it was pretty obvious that it was coming after so many months of just seeing the market roll over, seeing the rhetoric out of Trump. Anyway, I thought this was a pretty cool series. I'll keep updating it here, though in the end, I will be looking to add down here in this heavy buy zone. I've been nibbling a very small amount, but not a lot, I'll be honest. I haven't been going hard here. I'm waiting for a little bit more blood here and just waiting for a little bit more clarity as to what's going on the Trump side, because I think that their job is not yet finished, certainly nowhere close to being finished. So I'm not really sure that we've gotten to see the extent of the damage to markets. Now, could this be as low as crypto goes? Maybe. I don't know. I certainly, if I'm forced to, if we get back into this green zone, I'm rebuying everything. But I'm not convinced that that's where we're at just yet. This doesn't look very bullish to me yet. It still looks like we want to explore lower before we go higher. And getting back to this tweet, which I think is really important, you know, when the market has been up only, has been in this bullish posturing for a significant amount of time, these bottoms can take a while to form and, you know, reverse. It's not like you're going to miss it in just one instant. I think you're going to have plenty of time to get situated here. I don't think it's just going to be like an instant rocket ship. I think it'll be a recovery that takes some time. So that's the other thing I want to impress upon you is if you did pull any cash out and you're looking to invest more, I think there's going to be time here, time to heal. But let's look at some other things here, which is this 10-year bond. The 10-year bond is down significantly from when Trump took office, clearly showing that some of his plans at least are working. Some of his plans are working. We need to see this come a lot lower there. So it's still a lot of work to get this down into that 2% range, which I know is probably where he wants to get this. Now, make no mistake, there can be bounces. There will be massive bounces. If you plan to trade those, good luck, have fun, not my specialty. But now let's get to the point of this whole video, which is, what is this cycle? What is the cycle we're in? And if you look at ETH BTC, what you'll see is something pretty important, because what this line down here is the Fed balance sheet. We know that we're in quantitative tightening, and we saw that this particular trend lasted all the way until the Fed stopped tightening, which is this first vertical line. We know that the Fed is going to stop tightening some point here. And of course, what Donald Trump and co are doing are going to force that to happen, potentially even to start easing. And so what we see here is that they might even force this line to go back up a bit in not too distant of a time. But what we know is that this particular trend of ETH, you know, essentially bleeding against Bitcoin was happening all throughout 2019 and 2018. This is what was happening. Okay. And what we're seeing is that this is just looks like a longer, slower bleed out version of it with a longer, slower bleed out version of quantitative tightening. And if we go over to the Ethereum US dollar pair, and this is research that I saw first on Benjamin Cowan's channel, and this to me explains the theory very, very accurately, which is you had this period where ETH was just in this uptrend in 2019. During quantitative tightening, this is that line at the bottom. This is the Fed balance sheet overlaid. And you can see that this lasted 217 days, which is this uptrend of ETH during quantitative tightening before it broke down in the 2019 sort of mean reversion. And what I'm going to be making the case to you right now, and let me go ahead and make this clear. I'm going to be making the case to you right now that what we're seeing isn't actually a bear market, not like this. I'm going to be making the case that we're actually seeing a bear market like this, which was a retracement from a mean reversion. What happened in 2018 was we got this bear market, but then we got this massive bull market in 2019. Anyone here knows that this was one of the weirdest parts in the market after 2018, because a lot of us were altcoin degens at that point. Yeah, we still are. But what happened in this period was Bitcoin went from a bottom of about $3,000 all the way up to a high of $14,000, which is, you know, what is that? A 4.5x pretty much. And it was magnificent. But what was scary is altcoins pretty much didn't move. Bitcoin dominance was explosively up. It was exactly almost the same as what we've seen, just hard and fast. Okay. This is what we call a mean reversion because, you know, essentially it's settled. If you see the closing price here, you can see that it settled about 50% of the way, you know, the distance between the low and the high. You can see that this mean reversion right here was exactly where the closing prices were. This was just a massive collapse and then a mean reversion, which are normal types of bounces in markets. And so my particular opinion, which I started explaining the foundations of last cycle, was that we had a mean reversion where we came down from 69K to 20 or 16K. And if we were to get halfway between those numbers, we'd get about $40,000, right? That would be a normal mean reversion. And we were probably headed somewhere there, but we ended up getting these once in a lifetime stimuli from the ETF going live, from the first crypto president, from Trump saying, you're going to win. You're going to get a Bitcoin strategic reserve. All these amazing things that, are pretty much like candy in the ear of a crypto investor, and FOMO'd in a lot of institutional and new money into the space. We had a lot of ETF money coming in, and all of these changed the dynamic of the 2019 mean reversion, which both of the mean reversions happened during a period of quantitative tightening, and both of the mean reversions happened with pretty much Bitcoin dominance going to the moon. And altcoins really shouldn't have done anything, but because there was so much money in the space, the hot ball of money went around pumping altcoins, and there was some fabulous fortunes created. But really, this was part of a recovery of the market, not an actual bull market, but just the mean reversion aspect that happened in 2019. I think we've seen an extended version of it over the last 2 years or so. If you were to look at the 2019 move out of ETH from the bottom to where it actually broke down through this trend, you see that it has about 217 days. And here you can see that it's about 994 days from the bottom here to where it actually broke down. So it's been about 4 times as long, a little more than 4 times as long, this particular era when compared to the 2019 move. But so many other similarities line up, from Bitcoin dominance being sky high to quantitative tightening to ETH essentially underperforming, altcoins underperforming, specifically ETH as the king of the altcoins. I think that there's a serious case to be made that we've seen a 2019 with just, if you were playing Mario Kart, you essentially got a bunch of blue Bowser shells. You picked those up nonstop as you were supposed to have a bad lap, but because you got the blue Bowser shell, you were just able to run and gun and take out a bunch of people in front of you and make a bunch of progress that maybe in a normal market you wouldn't have, right? Without the ETF application, without the ETF approval, without the first crypto president, without legalizing crypto, the golden age, without all of these one-time stimuli that really propped up and pushed the market forward in, let's just say, an amazing but maybe not a natural, organic way. That to me is a reason to believe that we have seen what would have been a mean reversion on Bitcoin essentially look like an explosive bull market. But really, we haven't even seen the true bull market yet. Now, to be clear, I think the safe play here is just to wait for markets to kind of come down. Clearly, Trump wants to collapse markets. He wants to bring interest rates down. He wants to reset the clock, and he does not have a lot of time to do that. Remember, this is his last term. He has to act quickly. He does not want to end his term in a recession. He wants to get this over with quickly, reset the clock, reset the game board, and by his second half of his term, see things booming. That's what he wants to see. But there's another question. Do we have to wait for all of that ugliness, or will crypto start reacting to another force, which is, of course, global liquidity? We've been showing this chart because Bitcoin really does parity global liquidity pretty well. Remember, it's a global asset, and we can see global liquidity has been coming down a lot. But the reality is that Bitcoin hasn't quite matched it yet. You can see that the global liquidity here has Bitcoin and its fair market value price coming down potentially into the low 70s, which is again where the charts line up to, which is again where everything kind of has this confluence around those low 70s, mid $70,000 area. Could it go a little bit above that, a little bit below that? Of course, these are not hard and fast rules. There's no guarantees here. There is no guarantees in the crypto casino. But again, this shows you the more or less the path for Bitcoin. I think the real question though, as people who on this channel are probably largely into altcoins are wondering, well, when are we going to see this massive relief, this massive run for alts? And I think that that's going to happen much more reliably once interest rates come down, once the entire situation that Trump is doing is complete. That's when we will start to see risk return into altcoins. That's when we will start to see risk return into other kinds of stocks, not just Google and Amazon. That's when we will start to see the economy start to flourish and bloom again with low inflation, low interest rates, lower deficits, and a more sturdy foundation for the country. That is the hope. But that process is not an instant process. It could take a few weeks, could take a few months, it might take a year. And I think that it's important to remain dependent on the data, to remain dependent on some pretty clear signals, which I don't think are going to be masked from us. This is not a game of masking what's going on. Remember, Trump came out on day one and said there's going to be pain. He told us to our face. You could have chosen to believe him or not. But if you sold on day one when he started saying there's going to be pain, you probably would have avoided some pain. There's a big camp online of people who think that Trump never says what he actually thinks. I personally think the opposite. I think he says too much and too accurately of what he thinks. And that's what throws people off, is that he doesn't sugarcoat. He just says what's on his mind. And in this particular case, I think that they are looking to cause and inflict acute pain and then have an acute recovery that is not based on just massive unequal spending and inflationary spending. I think that their goal is to lower interest rates, lower the deficit, lower inflation, and then grow into a new cycle, a new business cycle. So my particular demeanor is, let's see, maybe global liquidity hits a floor and we start to moon later in the year. That very well could happen for Bitcoin regardless. Every other country on earth wants to stimulate, needs to stimulate. China's economy is in desperate need of new stimulus, and they are pushing money into the markets. You see this from across the world as well, with Germany now worried about their defense spending, and they're now spending $1 trillion on defense. There is a ton of money that is being cranked out from around the world. But the question is Bitcoin more loyal to the US economy and what Trump is doing, or is it more loyal to just the global whispers of liquidity? We're going to find out which particular model is most dominant in Bitcoin land here in the next few weeks and months. But it's important that you realize that this risk on, crazy, wet and wild altcoin bull run that I've been waiting on, that you've been waiting on, that we all are going to use to retire our bloodlines. Well, I don't think it's going to happen in just a small 3 to 6 month period like we thought before. I think we might be looking at a multi-year, maybe even a decade-long process of altcoins growing, more similar to the stock market, the NASDAQ that we know and love, where you have these protocols continue to grow and compound in a favorable environment. Because when I look at this ETH chart, I see an extended cycle, a super cycle. Again, super cycle doesn't mean up only and only up. It means longer, right? Super cycle means it's not just a 4-year pump and dump. It means that it's going to go on and on and on. And that's what I think we're looking at right now. We've seen the first 2019 part, which means that this next part, which only lasted for a year or so last time, well, it might last 4 years this time. If the mean reversion is 4 times as long, the bull market very well might be 4 times as long. And so as painful as this is, I can't help but be excited that maybe, just maybe, we will get cheap, affordable housing in the country. We will get zero or very low inflation. We will get a rate cut cycle that sends interest rates almost to zero. And then we will get hopefully a 2, maybe even a 4, maybe even an 8-year bull run for our beloved crypto assets, where your favorite protocols could multiply not just 10x or 50x, but these could be the generational runs where if you are in and you hold through it, I think that this is truly the make it cycle. But it's going to take some time for us to see the macro factors become accommodative. You're going to need the Fed to get in line with Trump's plan, which could take a bit of pain. We know that it's going to take a bit of pain before Jerome Powell is forced to act. And that to me is the plan. We're going to see pain, and then hopefully we're going to see a ton of gain, which is why I did take some cash on the table. I'm not in any rush to deploy right now, but I'm going to be eagerly watching this market and updating you on my thesis. And I hope you enjoyed this presentation as to why I believe this is an extended 2019, as to why I believe that we will also see an extended 2021, an extended bull run. But it's going to take a bit of time before the transition is complete. And we're not just going to get it based on some cheap sugar high dopamine of government stimulus, of government spending, which instantly ruins inflation. We're going to hopefully see it happen in a sustainable and long-term way with a more sturdy foundation from the United States, and hopefully for the working class as well, so that the society we live in is not totally screwed. So that if we are so lucky as to get filthy rich from this, the society that we live in is not totally screwed up as well. If you guys enjoyed this video, you know what to do. Smash the like button and make sure to watch this video popping up right now.